I think the other important factor, and I think it's really more important than all others, even though you won't hear about this on Bloomberg or CNBC, is the faith and confidence part. I mean, who's really running the United States now? Who's really running the Treasury? I know Janet Yellen is the Secretary of the Treasury, but yeah, I think a lot of powerful, wealthy individuals and powerful and wealthy or sovereign nations that have treasuries as reserves, they're asking themselves, is it really safe to keep our reserves with a country that is rudderless? Tuesday, July 2nd, 2024, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how central banks can go bust, in my opinion, and we're going to look at an example of an emerging market country that's taking its money out of the New York Federal Reserve. About a month ago, I reported that India had repatriated 100 metric tons from the Bank of England. Now it's the New York Fed, and that's not surprising. Before we look a little deeper into that, just wanted to comment a little bit about what's going on in the world, not just economic and monetarily, but also politically and socially, and these are all intertwined. And I was speaking with a friend yesterday, and about what's going on here in the UK in terms of the elections. And I didn't seem very worried or concerned. And my friend said, "Oh, you're so blasé." And I said, well, because I've been waiting for this. I'm not surprised that all this is happening. And I said, hopefully I have prepared well for it. And that's what's going on right now, not just here in the UK, but also in France. We're seeing a lot of turmoil. It looks like the losing parties in the first round of the election are going to try to gang up against Marine Le Pen's party and stop it from forming a government. We still have the second round on Sunday, but I think it's not going to work. We're seeing what's happening in the United States. I think the most important thing about this debate for the world has finally woken up. A lot of us have known for years what the condition of the occupier of the White House. But I think the question that foreigners and heads of other governments that are not too closely allied to the United States are asking themselves is, who's really in charge, right? And therein lies the problem for the whole Western financial system as well, I would say, because you probably heard the term that after the dollar went off the gold standard, the dollar was based on the faith and confidence that the U.S. Treasury would always print to pay you back. And of course, the huge amount of debt and deficit spending that's going on is already hurting the faith and confidence, and also the weaponization of the currency internationally to punish those that don't follow U.S. policy. That's making other countries want their money back, and we're going to come to that in a minute. But the other thing I wanted to say, I saw this tweet yesterday, and I was kind of shocked. And it says here, stealing $950 or less is now a misdemeanor in California. Make it make sense. And there's even a sign there. Stolen goods must remain under $950. So this is all related to this mess that we're in, monetarily, financially, morally, because currency and money are half of all commercial transactions. And if you trample on the sacredness of those transactions, on the measuring of the value of those transactions via fiat currency, you're gonna create a moral vacuum in society, and I think that's what this is a reflection of. There's no more respect for the individual, no more respect for the individual's property, and it's with that in mind that I'm gonna give a shout out to one of my very good affiliates, Dirty Man Safe, dirtymansafe.com. I highly recommend it. It's hidden protection and instant access. So you can put whatever you want in there, especially in this day and age where there seems to be no real effort from the powers that be to maintain law and order, to protect your property. So you can put your gold and silver in there. You can put even your hard crypto wallet in there. You can put documents or whatever is valuable to you. And I have a promo code or a link below in the description. You'll get 10% off and a free and a special gift from Dirty Men Safe. So go check them out. I think it's really important to have something in this day and age, and I'm not saying you should put everything in there, but it's helpful. So let's get back to what's going on in the world, and specifically to what I said earlier about a bank run. Yes, we know that bank runs have become more common of late. We saw them last year. They were electronic bank runs, but they were bank runs nevertheless at SVB. We saw them here in the UK in 2008. I remember going out with my daughter back in those days in town, and showing her the queue of people outside Northern Rock Building Society. It was historic, and I explained to her what was going on. But this bank run I'm talking about is when sovereign governments lose confidence in other central banks, and I think that's happening. I spoke about this a month ago, how India repatriated 100 tons of gold from the Bank of England. I recommend you listen to that, because it's really important for the Bank of England to keep a lot of people's sovereign countries' gold. And why is that? Well, because it helps them in the management of the price of gold via the bullion banks and the LBMA mechanism. And now it's happening in New York with the New York Fed. And the New York Fed, like the Bank of England, are quite instrumental in controlling or manipulating the price of gold. And why do they do that? Well, they need to keep gold under control, because a quickly rising gold price means that their currencies are in trouble, that their bonds are in trouble, and it would be the end of their whole fiat Ponzi scheme, which would be a good thing, and I think we're on the way there. And this is not a huge amount that they've taken out here. Nigeria, it says, repatriates gold reserves amidst concerns over U.S. economy. And it was Jan Neuenhaus who tweeted this out. And he says that Nigeria has a total of 21 tons of gold. I'm not sure how much they took out of the New York Fed vault. So the New York Fed is like the Bank of England. They keep a lot of foreign sovereign nations' gold there. It's a vestige of the old Bretton Woods system, because it was a system where you could exchange your surplus dollar reserves for gold at $35 an ounce. And of course, Richard Nixon suspended that mechanism on August 15th, 1971, and he did it temporarily. And here we are, almost 53 years later, and it's still temporary. So yeah, the dollar is not really, you can't really redeem your dollar reserves for gold. You got to buy it at the market price. And the same thing goes for the New York Fed. They use this gold to help their agent bullion banks like JP Morgan, Bank of America, Citi, Goldman Sachs, to manipulate, to control the gold price. And I know this is probably not a huge amount because their total holdings is 21 tons. I don't know how much they had with the New York Fed. But the problem with this is that it starts with a trickle, right? And then it gets bigger and bigger. And it is a problem for them. And I spoke about this a few years ago. And back in the 70s, and this was specifically 1975, Paul Volcker, yeah, at the time he was the president of the New York Fed. He hadn't become chairman of the Federal Reserve yet. And gold had just been legalized to be owned in the US by the public as an investment asset. And not surprisingly, gold made a really nice run towards the end of 1974 in the international market. And as you can see here, it topped near $200. And then gold became legal on the 1st of January. And then it started going down. It was a little bit of buy the rumor, sell the fact, I would say. But it's interesting that I found this letter many years ago, and thankfully the video, I've used this letter in some of my videos, and I was able to find it because I went online again. I couldn't find this letter anymore. It's been taken out. I wonder why. And it's a letter from the someone that works at the Vatican Bank or the Vatican Treasury. That's Amministrazione del Patrimonio della Sede Apostolica. That's like a mixture of a treasury and central bank for the Vatican. And this guy, Benedetto Argentieri, one of the officers there at the Treasury and Central Bank, wrote to Paul Volcker. And it's really interesting what he said. It says, "Dear Mr. Volcker," and this October 6, 1975. So keep that in mind. "I wish to tell you how much I appreciated your kind reception. The conversation we had in New York 1 month ago." So that was September 6th. He visited Paul Volcker, or beginning of September. Doesn't say the exact date. "Your letter of September 23rd has now come at hand. I note that you confirm the opinion you express on the gold held by your bank on behalf of the Amministrazione." So the New York Fed at the time was holding gold for the Vatican. "No, there is no objection to our selling it either on the official or on the private market." And why would Paul Volcker ask the guy from the Vatican to sell their gold? Well, I think it's because he wanted to bring the price down. And I don't think it's a selling the gold in the sense that we think that the Vatican is just going to get rid of their gold and take dollars. I don't think they would do that. That would not be the right thing to do for someone managing the patrimony of the Vatican. I think what Paul Volcker suggested to him is selling it forward, so leasing it out into the market, so that the bullion banks could take that gold, that lease, and be able to sell it short and bring the price down. And this part is really interesting as well. He says, "You also tell me that you are studying the possibility of enlarging the existing relations between your bank and Amministrazione. I thank you very much for the attention you are giving to this matter. Hoping to see you again in a not too distant future, I remain sincerely yours, Benedetto Argentieri." So isn't it really strange that It's Paul Volcker who's asking him to get involved in this scheme, and he's thanking him for that. It's really weird, isn't it? But I did a little research here on the price of gold back then, and you can do this on barchart.com. And you can see that red arrow. It's pretty much around the time that the Vatican Treasury and Central Bank official meets with Paul Volcker at the New York Fed. And gold was trading just above $150 an ounce. And look at where it went for the next, basically, year. It went almost down to 100. And of course, all that did was delay the inevitability of the fact that the dollar was going down the drain, because 3.5 years later, gold went up above 800 to trade almost at 900 in January of 1980. And in London, it's even worse, because they can lease, let's say the Vatican had 10 tons of gold, they can lease like 100 tons. They leverage it just like a fractional reserve. And that's why I think it's really important to keep an eye on all these repatriations of gold. And yesterday I spoke about the BIS warning about the bond market, sovereign bond market. And it's interesting that, lo and behold, treasuries were under pressure yesterday. And the 10-year yield rose 15 basis points. So we went from 4.35 all the way to 4.5% yesterday. And yes, that's a big move, 15 basis points in one day, but it's not unusual for the last few years since we've been in a bear market in bonds. I worked in the bond markets for over 20 years. Yes, it's a big move, but it's not a disaster. I would say 30 basis points, that would be bad, and we need to keep an eye on it. So the key levels now for the 10-year yield, I guess 4.5 is a psychological one, because a lot of these markets trade, people talk about 4%, 4.25, 4.5, but there is technically a high recently at just above 4.75. So that would be a key level. And then the high from October last year, which was just above 5%. And I think we could get there. And what do I think is impacting this? Why are people losing confidence in U.S. Treasuries a little bit? Well, because there's still a lot of borrowing to do by the U.S. Treasury. We've seen that the deficit was a lot higher than the CBO had projected. They projected something like 1.7 trillion deficit for the current fiscal year, but they just came out and said they've revised it to 1.9. So there's an extra 200 billion they have to borrow. The other thing that's going on is that the yen continues to melt down. The dollar is approaching 162. So that might force the Bank of Japan to intervene. And how do they do that? Well, they sell a lot of their treasury reserves so they can have dollars to sell the dollars and buy the yen in the foreign exchange market. That's not going to help. I think the other important factor, and I think it's really more important than all others, even though you won't hear about this on Bloomberg or CNBC, is the faith and confidence part. I mean, who's really running the United States now? Who's really running the Treasury? I know Janet Yellen is the Secretary of the Treasury, but yeah, I think a lot of powerful, wealthy individuals and powerful and wealthy or sovereign nations that have treasuries as reserves, they're asking themselves, is it really safe to keep our reserves with a country that is rudderless, where we don't know what's going to happen? And I think that's the most important factor. And it could be a trigger for the total implosion of the whole worldwide monetary system, which is based on the dollar. And yes, we do live in interesting times, and hopefully you've prepared for it, because I've been warning about this. Mainly because I've known that once you start down the road of money printing, inflation, yeah, you can't stop. And eventually it leads to the collapse of the social construct, everything. And I think that's where we are. So I'm going to stop right here today, and we'll look at the markets tomorrow. But with that, I'm going to wish you all a very good day. Take care. Bye.